Remember, this is going to be a low volume day anyway. Day after Thanksgiving. It closes early. So that's about a 0.7. It continues to fail right about here on the when the RL10 rolls over, crosses the baby dragon, gaps or lowers, gets a lower opening, continues to fail. Right around in here, I was considering the short. I really am more interested in probably down around here, which is the low of the day. But I was not in a hurry. I was really looking for this kind of motion. I was spiritually, psychologically not prepared to be short. If I had been short, this would have been the reasonable price. This would have been reasonable here too, because you have a PSAR flip, and it makes a low lower than that one. This fail right here. That was, if I was going to go short, I have to be prepared to do that. I was just not prepared to do that. I was still thinking we were going to get a long out of this one. So that's what I get for thinking. When this rolls over, at the edge of the dragon and then starts failing again, that's the next place I looked at getting short. I looked at getting short here as well. I just couldn't pull the trigger on it. So, and what the point I want to make is that anywhere in here where it breaks the dragon, PSAR flip, rolls over, rejects the edge of the dragon and is failing. I mean, you get the dragon down, the RL10 baby dragon down, the RL10 is down, make a new lows. Anywhere in here is a reasonable entry, and then a price action that gets you to here and starts to reverse. You could just exit. And then if you got here, you make that gain. If you went here, you got that gain. So there was opportunities on the short side here I just was not prepared for. Time, will, pattern, and money. All right, so now that's a 1-2 right there. All right, so here's a low. Now this one opened at the low, so I don't count this one as a 1. So this made an equal low, so this is now tentatively bar 1. Now, and closes here. Now this one opens here, makes a bit of a low, makes a bit of a new high, and then closes here. When this closes, when that second bar closes, now we can test to see if this is a bar 1, 2 of a 1, 2, 3. Like, we don't know that this is actually bar 1 until bar 2 closes, and then what we do is we inspect it. We'll say, did it make a higher low? Yes. Did it make a higher high? Yes. Therefore, this is bar 2. Those two things have to be true for this now to be bar 1. Now this is bar 2. So now bar 3 is going to open right where bar 2 closed. And what we're looking for is, we're now paying attention to the low of bar 2. Now bar 3 has to make a new high above the high of bar 2, then that is a signal to go long. As long as it has not made a new low compared to the bar 2 low. So it opens, and now what we have essentially is a yellow zone in here. As long as it stays in the yellow zone and does not make a new low, then, and only then, any breakout above the high of bar 2 is a signal to go long. That would make it a bar 3. Check or hold. So that's the 1, 2, 3 pattern. We're essentially looking for something like this. When bar 2 closes, we check to see, is this low higher than that low? If so, then we can say retroactively that that is bar 1. You know, that was it's made the swing low, so it made a new low. And then we're also checking to see, did it push to a new high? If so, then this is bar 2, then this is bar 1, and then what we can do is buy a breakout of bar 2. We can buy the breakout as long as it has not made a new low. So it could very well just have open and came down here, tested, and then broke out. That right there would be a bar 3 entry because it had not made a new low below bar 2. This is just a way to try to capture this kind of pattern where we see this, an orderly move that's making higher highs and higher lows. So a pattern that looked like this would not be, this one retroactively we can see because it made a new low, that's no longer bar 1. So now this becomes potentially bar 1 because it has the lowest low. Then we would see, did it do this? Oh yes, now this is bar 2. That's now bar 1. Now we can draw the line here and say tentatively, if this opens and keeps going without making a new low, then that's bar 3 entry, 1, 2, 3. All clear? Now, let's see if we have a 1, 2, 3. This was the working low, tentatively bar 1. When bar 2 closes here, we can say, yes, it made a higher low, check. It made a new high, check. That makes this bar 2, that's a bar 1. Now here's bar 3, it opens. It went higher than bar 2, so we could technically get long right here because it has not yet made, that should be red, it did not break the low of bar 2. So where do you put your stop on this one? What I like to do is just take this. Just take our MMRB, because why not? And just hang that off here. And that gives us a manageable risk box. Now the thing that we notice is there's the belly of the RL10, so you could already shave off that much, because you would not stick around longer than here, because if this price fell, you'd be getting short here as a collapsing dragon. So you're never going to stay longer than that. So I've already reduced my maximum loss to 0.7. If you took a 2-bar low, you'd be shaving off even more. And so you're only taking half of an MMRB. And then the tactical region is here, the top of this RL10. This is where it gets interesting, because it's cleared the statistical resistance. So that means that this entire space here is your tactical trade space. And the only thing that I have to do in the tactical trade space is get my stop, let's just say it was here, above my entry. Something like that. If I can do that, then I have locked in no lose plus dinner for two, and your entire psychology will change. Check or hold. So, could we have gotten long here? The answer is yes. Could have. If we do, we would call that a 1, 2, 3. Because 1, 2, 3. I didn't, but we could have. So now let's see what we got here. If we do get long at a 1, 2, 3, this thing goes up and rolls over. Now you get two lower highs and starting to fail. As this comes out of the dragon, so if you had gotten long here, you know, if this thing works, it's supposed to go right now. It's supposed to go above the hump of the dragon, up to the top of the last place that it got to from this trade. It's supposed to go, but it didn't. It's doing this. That's long enough. And you'd take about a 0.2 loss. So if these don't work right away, they're not working. So now let's see what we got. We have that hump of the dragon rolling over. There's the spine. There's the belly of the dragon. Notice here's that PSAR. Just as a point of reference, I put the, if you had gotten short here, this was the MMRB box. If you'd gotten short here, this would be the MMRB box to the top of the PSAR. So when you get long here, it's got to get out of this. It's got to get out of this box to be interesting at all. It didn't. So as soon as that starts rolling over to here, get out. So now we're taking a look at this piece. We've got the RL10 here, and in this price action up, it was strong enough to make the RL10 reverse, but now it starts rolling over. So you get a peak of the RL10, crosses the baby dragon. Here's the belly of the RL10. There's the low of the day. You don't have to wait for that. That is the statistical bottom of price, is at the where the RL10 bottoms out. So what would we call this entry? Collapsing dragon, correct.